Perfect. Okay, here we go. All right. So, hello, everyone, and welcome. We are so glad you're here tonight. I'm Hillary.
And I'm Bethany, and we are the founders of Sincerely Divorced. So nice to connect with you in person. Well, in person.
Virtually. Before we get started, we just want to let you know that tonight's webinar, like I just mentioned, is being recorded, and a copy of that recording will be sent to all of your emails afterward. So don't worry if you want to go back and revisit anything that we cover.
One of the biggest mistakes that people make is in divorce is leaving money and assets on the table that they actually deserve.
And that's why we're excited about tonight's conversation. We'll be joined by our incredible expert, Sara Nanchanatt. Sorry, Sara. I put it in there and I still feel like I got it wrong. Who is a CPA/CFF and the founder of S.N. Forensics, a New York-based forensic accounting and valuation firm.
Sara specializes in asset tracing, income analysis, and business valuation, tools that are crucial in divorce and matrimonial disputes.
She's known for providing clear, credible, and cost-conscious analysis to help both attorneys and clients understand the full financial picture during the divorce process. And when needed, she can even serve as a testifying expert in mediation or litigation.
Tonight, she's going to walk us through some really important topics like what forensic accounting actually is, how to investigate hidden assets or accounts, business valuation in divorce, how income is investigated for spousal and child support, and the overall benefits of using forensic accounting in the divorce process.
All right, so we are going to dive in. So please join us in welcoming Sara to the presentation.
Hi, everyone. Thanks for having me. I'm super excited to be here. So I'm going to go through the presentation. If you have questions, feel free to stop me on a slide that I'm on, send questions in the chat. I'm happy to make this informal and conversational. So let me share. All right, can everyone see the slides okay?
I can see them.
Okay, perfect. So working with forensic accountants in divorce cases, when, why, and how divorce professionals or individuals can collaborate with financial experts. Actually, give me 2 seconds. I am so sorry. This is not the right presentation. Sorry about that. Give me 2 seconds. Okay, here we are. Okay, so forensic accounting in the divorce process. So what is forensic accounting? So forensic accounting is the application of accounting principles, methods, and techniques to investigate financial discrepancies, fraud, or other issues. So if you've heard the word forensic before, you might have watched CSI or heard it there as like a forensic scientist. So forensic basically just means anything suitable for a court of law. So what we do is often very much in tandem with active litigation, especially divorce, just like, forensic science would also be used to uphold the law. So key roles in forensic accounting is identifying hidden assets and income, valuing businesses or assets, analyzing financial statements and tax returns, detecting financial misconduct, providing expert reports to the courts, and then if needed, testifying to those expert reports and opinions. So forensic accounting, how to retain. So there's a couple different ways that this can go. So if you are in active litigation or a contentious divorce and you have a divorce attorney, that attorney and you can retain a forensic accountant on your side of the divorce. There are also situations where you might be going through mediation and you just need a business valuation, you agree on the asset division, and you just want to hire a neutral. And what this means is the forensic accountant works with both sides to reduce costs and come up with an agreed upon analysis. But either way, whether you're retained by one side or you're a neutral, forensic accountants still have to be independent third parties, regardless of the side. So the way we work is that we follow the facts. And so just because a client engages us doesn't mean everything we find is going to be necessarily a pro to their case. Sometimes we might have to offset some things, but the reason why we're so respected and regarded in the industry is because we give facts and we're fair. So a lot of times judges will listen to a forensic accountant over an attorney because we are those independent third parties and we're saying, hey, we went through the statements and this is what they show. There's no advocacy for one party versus the other. We're really just relaying the truth and the facts. So if you're going through the divorce process, you might have also heard about a CDFA, which is a Certified Divorce Financial Analyst. So when do you need a forensic accountant and when do you need a CDFA? Forensic accountants specialize in investigating and verifying financial data, and CDFAs specialize more in planning and strategizing post-divorce finances. So as an example, let's say I find a hidden bank account in my analysis. That's where I end. I've done my work, I've traced the information, and a CDFA can help you now figure out what's the appropriate division of that account. How does that account maybe affect your tax planning purposes? Forensic accountants often provide expert witness testimony or reports to the court, and CDFAs work more outside of the courtroom with their clients. Forensic accountants perform asset tracing, fraud detection, and business valuation. CDFAs focus on division of assets, tax implication, and budgeting. I would say almost on every case you need a forensic accountant, I always recommend a CDFA because it is not apples to apples. If I find a retirement account versus a bank account, there's different tax implications, there's different planning, and having that extra professional is super helpful. Forensic accounting can be almost like a dirty word in divorce. If you say you're getting a forensic accountant, it means you are contentious, you are fighting, which you have every right to do, whereas a CDFA is usually more collaborative or amicable. So how forensic accountants uncover hidden assets. You know, we're not magicians. We're not going to find if someone's hiding $20,000 in cash under the mattress. But here are techniques that we use for tracing assets. We review financial records, which are bank statements, credit cards, and tax returns. We perform lifestyle analyses, which examine discrepancies between reported income and spending. We can help conduct asset searches for real estate, vehicles, bank accounts, and offshore accounts, and also digital forensics. We can work with partners to monitor email, online transactions, and social media activity. Red flags that we often find are unexplained transfers of funds, large gifts or loans to third parties, sudden or suspicious changes in spending habits, large withdrawals, and what we call marital waste. So marital waste can be funds that are spent by one party, not to the benefit of the marriage. So if one party is having an affair, has a gambling or maybe alcohol problem, and they're spending a lot of money towards that, and money that should have been joint but is now being theoretically wasted by one party. So next, what we work on is valuation of business interests. So nowadays, a lot of people own their own businesses, and valuing a business can be complex, especially if it's like a 1 or 2 person operation. So we use different methods to determine the fair market value. We have to factor in how that business is structured, what economic conditions or industry trends exist, and the role of each spouse in business operations. Some challenges can be assessing goodwill, which is someone's personal reputation, intangible assets, or if the financials we want to use for valuing the business are not accurate. So a main way that we're engaged in matrimonial disputes is for investigating income and spousal support. So in income analysis, we can review pay stubs, tax returns, and other income-related documents to determine accurate earnings. We also can identify unreported or underreported income, maybe side businesses or freelance work. We review bank activity and deposits, and we also can impute income. And imputed income basically means non-cash benefits that someone received without getting a paycheck. So if you run your own business and you pay for your house through the business, well, that's not really a deductible business expense. And it's a benefit that the owner is getting that the business is paying for, even though the owner isn't directly receiving that money. So we often perform those types of analyses to make sure that we're truly identifying the proper income. We also can do lifestyle analyses. So a lot of times this happens like someone saying, I don't have money for alimony, I don't have money for child support, but they spend $20,000 a month on vacations. So these types of analyses can show really what they can afford and what they have been affording for their lifestyle that they are asking not to pay in the divorce process. So here's an example. This is all completely fictitious figures. And so this is kind of an example of an analysis that we can put together for marital spending, lifestyle, things of that nature. So in this case, we're looking at all the deposits that are coming into the account. And then we're looking at, okay, well, what type of money is being spent? I highlighted here like ATM withdrawals. Where is that cash going? Oh, I'm sorry. Does someone have a question?
Sarah, I think, well, okay, one of the things I think is happening is that the slides are not moving.
Oh.
And someone said that they can't hear anything. So I'm not sure what's happening. Cindy, on your end, I can hear, but I can see that the slide is on the same page. And if anyone else can comment on what they're seeing, that would be helpful. But I only see the title slide.
Oh, really? I see the full thing.
Okay. All right.
What's everyone else seeing?
Yeah, we're just seeing like the the back end. Yeah.
It just moved.
I can hear you guys. I can see it now.
Oh.
Thank you.
Okay. Something weird is going on. I'll just keep it in this mode as opposed to present mode. And let me just like quickly shuffle through those slides I read off of. You probably thought I all had that memorized, right?
Right.
You sounded
Also,
like you did.
Yeah, I was just giving a monologue. Christy, did you have your hand raised?
Yes, I saw Christy's hand too. I'm not sure if she's Christy,
Yeah,
if you have
I
a
did
question,
too.
jump in, or if not, it's fine. No pressure. We just don't want we don't want to go on and you have a question.
Okay, great. We'll keep going. If the question appears, feel free to ask us. So I'm just going to quickly go through these slides that I talked through. Oh, now Cindy has a question.
I do have a question. Oh, okay. Are the slides going to be available afterwards? Just in case I missed anything in the beginning. I was having trouble connecting.
Yeah, we can share the slides. I'm going to quickly go through them now. I think there was a share issue.
Oh, okay. Okay. Thank you so much.
Yeah, of course. Okay. So this is our first slide about forensic accounting. This is how to retain them. This is our forensic accounting versus CDFA. Cindy, do you have another question?
No, I don't. No.
Oh, sorry, your hand's still up. I'm just going to skim through these because we already talked about it, but if there's anything people want to go through more, just let me know. Let's see, where was I? Oh, okay, this slide. So this is an example of an analysis that we can do when it comes to analyzing the type of spending that's going on within the marital accounts, looking for certain activity. This is all totally fake numbers, fake cases, but just looking at, I have highlighted here, you know, we see very large amounts of ATM withdrawals. And so these are the types of things that we try to look at in our analysis. Is cash moving? Are there a lot of transfers, which I kind of have highlighted down here below? Is there a lot of money on credit card payments or to hotels? And really, we just break it down through using your bank statements to come up with this type of an analysis. So the benefits of forensic accounting in divorce. So it's really to strive for a fair asset division. You know, we can never guarantee that that's what's going to happen, but we want all parties to know all the information and have the best understanding. We can, it's not always going to happen, but uncover financial misconduct. So we can see if there's been that excess spending, those excess transfers, or if any assets are hidden. We also help provide accuracy for support calculations, providing clarity and accuracy for child and spousal support. And, you know, having a forensic accounting expert gives you that little extra push in your case. It's one thing if you go forward and you say, hey, I think my spouse is hiding money, versus having an expert up there testifying, saying, hey, this is what we analyzed and this is what we found. So in conclusion, forensic accountants can be really invaluable assets in your divorce case. We can help uncover hidden assets, accurately value businesses, and ensure a fair financial settlement. And that hiring a forensic accountant can make a significant difference in achieving your just and equitable settlement. And then this is my contact information. And if anyone wants to go back to a certain slide, I'm happy to explain more, but I'm also really just happy to have questions and an open conversation.